It's also an interesting point in time. I'm actually expecting a faster slowdown, and actually I think rates back off. But either way, we're kind of record oversold versus every metric for the space. You know, even simple stuff like RSIs are the lowest they've ever been, you know, on-chain metrics, everything. So either way, it feels like the risk reward in crypto at these levels is really bloody good. So let's say it hasn't bottomed. Maybe I'm wrong. I think it's bottomed, but let's say it hasn't. Let's say it goes down another 30%, 40%, 50. Let's say use 50% for easy maths, because that's the kind of moves crypto does when it feels like it. The upside is 10x from here, at least.
Hey guys, welcome back to Library of Wealth. Today we have crypto investor Raoul on the future of the market and the massive growth he foresees coming in the next few months. He says one of the reasons why crypto digital assets have plummeted is because unrestricted spending had emerged from the market. Because market prices rose, people didn't have enough to purchase any dollar cost averaging crypto, which eradicated a massive amount of buying power. He talks about the familiarity he has with the fluctuation of the industry and how he initially underestimated the massive opportunities available. Let's listen to this interview with Raoul as he gives his take on the upcoming recession, cryptocurrency, and the flexibility of the market. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
But let's talk crypto as well now. So how does this macro framework, which sounds like either inflationary or a certain amount of monetary tightness that we're not used to, how does that work in the crypto market? How does that flow through?
Yeah, so when the Fed and the Congress started printing just, insane amounts of money, I will admit I had my pom-poms and I was like, this is awesome for Bitcoin. You gotta own Bitcoin. And, Bitcoin's at 3,000 or whatever at the time, to 60,000. So huge fan of that story. So some people say, well, it's totally counterintuitive. If they're going the other way now, that's going to be horrible for crypto. And I really, although admittedly I was hugely positive on Bitcoin because they were printing tons of money, they've already printed all that money. It's out there, right? There's 9 trillion of bonds that have been printed and out there. And that money's not going away, probably, right? Like, I don't think they're going to sell all those bonds and take all that money out of the system. I actually think they should, but I just don't think they will. So all the money's already out there. So it will still keep sloshing around and generating inflation. And there's this huge debate right now, is Bitcoin really a good inflation hedge or not? We don't know because we haven't had inflation for 15 years, right? We're going to find out. I actually think we're going to find out it is a great inflation hedge, that when people are worried about the currency being debased 10% a year, they'll start looking for alternatives. And that used to be countries like Argentina or Venezuela or whatever. Now it's gonna be American citizens, it's gonna be British citizens, it's gonna be Europeans. All are gonna be looking for ways to get protected on the debasement of their currency. And although recently crypto's been highly correlated with risk assets like the S&P, I'm betting that it's going to break down.
Powell believes that to know how the economy is, you need to look within the biggest sectors of the stock market. This means looking into utilities and consumer discretionary stocks. If the economy is failing, this means that discretionary stocks are decreasing, which means we need to prioritize buying and owning as many utilities as possible. Powell has seen that even though business cycle indicators are accurate and more people are studying them over time, they aren't naturally the operator of current price action.
There are going to be more people going, if rates do keep rising for the next 2 or 3 years, I don't want to own bonds, definitely. Probably don't want to own stocks. The Fed really has to get real estate to go down before inflation stops. So I got to get out of real estate. Crypto and gold and soft commodities, kind of the only things left, or art, maybe, intellectual property. There's a few things that are kind of different from rates, but not many. And so I think, crypto being one of the biggest and most interesting will start to get the marginal dollar being allocated to crypto.
It's also an interesting point in time. I'm actually expecting a faster slowdown, and actually I think rates back off. But either way, we're kind of record oversold versus every metric for the space. Let's say it hasn't. Let's say it goes down another 30%, 40%, 50%. Let's say use 50% for easy maths, because that's the kind of moves crypto does when it feels like it. The upside is 10x from here, at least. So the risk reward at these levels becomes ludicrous, which people don't understand. These network adoption models Whenever you're kind of dramatically oversold, your risk reward explodes in ways that doesn't exist elsewhere. How are you thinking through this?
Well, you mentioned drinking some wine, but I think we're drinking the same Kool-Aid, because I totally agree that crypto's gone through these wild cycles, as you know. And sometimes it is kind of bubbly and overbought, and sometimes it's really inexpensive. And I literally think right now is the most compelling, even value-oriented time I've seen in 10 years of doing this, right? There were some times it was the same price as it is today, but we were 4 or 5 years back in history with, hundreds of millions less using it and, all that stuff. And so I think given that we've had a 75% fall in Bitcoin, 80, 90, and some of the other things, we're really at incredibly cheap levels. And a couple of metrics on that. We've never had a period that Bitcoin's at the same price it was 4.5 years ago before. It is. So it's right where it was in 2017. And I got to tell you, nothing is built out in 2017 as it is today, right? We have so much more stuff happening, so many more people using it, all that. So just on a fundamental basis, it's better than it used to be, back in that era. And just a great metric for how cheap things have become. All of DeFi, $8 billion. That's crazy, right? We can complain about, about DeFi is only people speculating, whatever. To be only $8 billion when the legacy financial industry is $2 trillion is just cheap. And like you said, it's very asymmetric, right? Say you buy all of DeFi and you pay $8 billion, right? You can only be down $8 billion. You might be up, 10, 20x on that. And I really do think we're at that level. We're so inexpensive on most tokens that the risk reward is fantastic. Obviously, it could keep going down. It could go down for another year or whatever. But it just doesn't feel like when you do an expected value type calculation, you can't, it just seems like you're going to come up with a great time to be invested.
I look at this and, we've got the ETH merge, which we'll talk about. We've got significant potential catalysts around. And all I know is everybody's underweight again. Every hedge fund I speak to, every family office, every institution, they're underweight. And I'm like, and you and I know this, the path of most pain is usually where markets go. And I'm thinking, well, probabilistically speaking, it's up, not down, because everybody's expecting a new low. I can buy Bitcoin at 15,000. That's the kind of narrative. How do you think about the kind of upside, downside risk reward here?
Oh, I agree. The best time to buy is when there's a whole cottage industry of people predicting how the next 50% downdraft is going to happen. I see that all the time in research and everywhere, talking about the next shoe to drop or the next whatever, or the next Celsius or the next, no, that would have been really useful at 65,000, right? If somebody had said, hey, the market's probably going to go down 75% in the next 4 months, that would have been great research. Nobody was saying that. Everybody's massively bullish at 65,000. And now that we're, at 20,000, people are all like, oh, it's, we got another 50% to go, or it's, Fibonacci hits 11,000 or whatever. That's the best time to buy, when everyone's now an expert on bear markets. There was even a conference session recently about the best short strategies. I'm like, no, it's terrible. Who wants to get short in this 75% hole, right? And again, no one was saying that at the highs. And to my mind, that, that's a great sign that it's time. Also, time itself heals a lot of wounds, right? Whatever leverage people had, whatever distress they were in, it's been 8 months since we were at the highs, right? That just stuff gets worked out over that period of time. We're already well past the average length of a bear market, or had the same depth, it just kind of, you and I know, you can take pain for so long and then you have to, give in. And just, there's a period of time that markets just can't go down that much longer, because people, just everyone finally has given in. And I think we're at that point, that we've been down for 8 months. It's very easy for me to see the low having already been put in June. And, we're kind of back to the next cycle.
Powell says that his primary cryptocurrencies are Ethereum and Solana, but he also maintains an equally weighted basket as a hedge against a hard hit. He also created an asset management company to assist him in finding the best investment. Powell doesn't believe that crypto regulation will be a big risk to the market, because there has already been a giant deleveraging. He sees that this has been the shortest period of time where wealth has been collected in such large quantities. The only issue is people lacking conviction to hold on to their investments in time to claim a massive risk reward. What do you guys think about Raoul Pal's current market strategy? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.